Beware, Congress may eliminate the step-up in basis on long-term capital gains. In this episode, I'm going to answer the question, what is the step-up in basis on long-term capital gains, and how you can preserve it, and what is looming over us based upon government revenuers who want to get rid of the step-up in basis. So you're going to learn in this episode a lot of things that you maybe did not even know about before. So my name's Doug Andrew, and I've been a financial strategist and primarily a tax minimization specialist for more than 46 years. I've helped many thousands of clients avoid paying unnecessary tax. Well, that's true as it relates to long-term capital gains. So first of all, let's understand the difference between a short-term and a long-term capital gain. If you hold an asset, stocks or real estate properties, rental properties or whatever, and you buy them and you hold it for less than a year at the time of the recording of this video, and you sell it for a gain, that is a short-term capital gain, and those are taxed at your ordinary income tax bracket rates. Now, sometimes the holding period has been 18 months. Right now it's 12. Anything over 12 months or 1 year, you qualify for long-term capital gain rates, which are less under the current tax laws under President Donald Trump at the time of the recording of this video. They may change because it seems like when Democrats are in control, because they're tax revenuers, they love to have bigger and bigger government and more tax programs, and so they like to raise taxes. So many times they will get rid of a capital gains tax rate that is lower, and they'll have you pay tax as ordinary income. Now, if you've watched any other episodes regarding this, I personally feel like capital gain tax rates are a little bit unfair because you're really paying tax, especially on properties, real estate, on inflation. Most real estate only appreciates maybe 3 to 4% a year, sometimes a little bit higher, but that's inflation. You're being taxed on inflation, the cost of living, and so why are you paying tax when you're just trying to stay even with or a little bit ahead of inflation? But government revenuers love to tax things when they think you're realizing a lump sum of money because you just say, okay, I guess I'll have to pay the tax, and you give in. They realize it's easier to get money out of you when you're realizing some money from the sale of something. So that's what a long-term capital gain tax is. Now, Trump being Republican, he believes that it's better to raise tax revenue by raising the revenue generated in America than gets taxed even at a lower rate, because historically it's been proven if you raise the revenue that's being taxed, you'll actually end up oftentimes with greater tax revenue. Whereas Democrats, they primarily say, no, we just want to raise taxes. So under Trump, the current tax rates for a single individual, if you make between $0 to $40,000 a year and you sell something and have a long-term capital gain, you pay a $0 to the federal government in long-term capital gain tax. A married couple, it would be about $80,000. This is in the year 2020 that I'm giving an example. Now, anything between $80,000 for a married couple up to about $500,000 of income, you pay 15% to the federal government. Plus 41 out of 50 states has a state income tax. And so I sold many properties in 2019, 2020, and I've had to pay actually 20% to the federal government, because if you have an income and your capital gain qualifies as part of that income, then you have to pay 20% to the federal government, plus another 3.8% for Obamacare, because he has a tax on capital gains to fund his Obamacare package. So I've had to pay 23.8% in federal tax on long-term capital gains, plus another 5% in my state, or a total of 28.8%. Joe Biden, at the time of this recording, he says, if I'm elected, I am going to get rid of the step-up in basis on long-term capital gains, and I'm going to raise the capital gain tax rate up to ordinary income rates. Now, for a couple making over $400,000 between both spouses, that would be 39.6% in the Biden tax thresholds. Trump lowered that down to 37. Biden wants to raise it up to 39.6 and raise the capital gain rate from 20 up to nearly 40. That's doubling. He also wants to get rid of the step-up in basis on long-term capital gains. It's going to happen sooner or later because whoever's in power in Congress, it sways back and forth this way. That's why it may behoove you, if you want to sell property, to get the capital gains taxes over with sooner than later at half the rate. What happens is you sell a property, and unless you buy a like property and roll it over, if it's real estate, with a 1031 exchange, you can no longer continue to defer until you die. But a lot of people, they inherit new headaches when they sell a rental property, let's say, and then they have to buy a new one of equal or greater value in order to defer or postpone paying the capital gain. But they inherit another headache maybe, and maybe they're tired of being a landlord, fixing toilets and taking out trash and evicting tenants and what have you. Well, the problem is they get caught in this tax trap. They want to avoid the long-term capital gain. Well, in retrospect, many of them realize it would have been better off to pay the 20% rate and get the taxes over with than to wait and have to pay double that. But especially Joe Biden, for example, wants to get rid of the step-up in basis. Why do people postpone or defer? Because if you keep deferring or doing 1031 exchanges on real estate and you die, your children get to inherit it with a step-up in basis. Or if it's stock, your kids get to inherit stock and they don't have to pay the capital gain on what your parents paid for the stock way many years before perhaps. And so that's called a step up in basis. Well, they only have to pay tax on what they sell the stock or the real estate for over and above what it was worth when they inherited it. If you bought it for $200,000 and you inherit it and it's worth $1 million, you don't have to pay the capital gain if you inherit it. Well, that's called a step up in basis. Beware. They want to get rid of that so that anytime anybody inherits a highly appreciated asset, they will have to pay the capital gains rate at double on the entire gain that they inherit instead of getting a step up in basis. That's why I'm saying you may want to rethink your thinking. So let me connect the dots here for you. So many times when I tell people, if I were you, I would just bite the bullet and pay the tax. And they go, oh, I don't want to pay the tax. I'm going, why not pay 20% today instead of waiting when you know you're going to have to pay 40%? Oh, but I'll get a step up in basis with my children inheriting it, right? I'm going, it doesn't sound like it. Sounds like the Democrats want to do away with the step up in basis and double the capital gains tax rate. You're stuck. So maybe you want to sell and get it over with. So let's say you have $1 million capital gain on a piece of property. You pay $200,000 in capital gain tax. You have a net of $800,000. You wouldn't believe how many times clients of mine have taken the net of $800,000 after paying the capital gain tax. They put it into my favorite vehicle, which I call the laser fund. And I have many educational videos that talk about the laser fund, which is a max funded tax advantage insurance contract where I earn 8 to 10%. I've been doing this for more than 25 years on my index universal life policies, meaning $800,000. If I'm earning 10%, that's going to double to $1,600,000 about every 7.5 years or so. And it means that whenever I start taking income, if I have $1,600,000 and I'm earning 8%, see, I can pull out 8% a year tax-free, which usually is greater than the rental income they were getting out of the property, and they don't have to be a landlord anymore. Or if they wanted to start immediate income, they can do that. And there's ways where you can get a 10% payout that will last as long as you do without depleting principal. When people see that, they go, wow, maybe it's wise to get the taxes over and done with sooner than later and reposition it into something that's management unintensive, and I can go enjoy life and I get the same cash flow or greater. In fact, when they see it, they go, huh, where have you been? I go, I've been here all along. You had your blinders on thinking owning this real estate and deferring the capital gain was a smart idea. No, it may be smart for you to bite the bullet, pay the tax, and reposition it into something that's going to be more predictable and tax-free from now on. So if this is intriguing you, I would implore you to watch a few of my other educational videos. Click on this one up here and search and find out how you can accumulate, access, and transfer your money totally income tax free. And this is where most of my clients reposition the after-tax money when they pay the capital gain tax and decide they don't want to be a landlord anymore or deal with the volatile stock market if it happens to be stocks. So make sure you do the right thing, study, and analyze the big picture in the long haul, and I want you to come out ahead.